Welcome back to Bears and Bulls, the stock traders strategy site. Today we are going to follow up on our previous two videos, and this is where things start to have some fun and be interesting. We're going to get into trading some stocks. So, first of all, let's just review what we've done in the last couple of videos. The resources you'll need to trade stocks with me here are one, Trading View, free program. I pay for the upgrade. You don't need the upgrade right now, but it's certainly not a bad idea. You're going to need the indicators that we talked about, which are right here. If you want to screenshot those, go in, find the indicators, load up your screen. You're going to need FinViz, financial visualization. So FinViz is a free site as well. Tons and tons of information on this site. It's used by almost everybody. So you will need FinViz. It's free. Again, you can pay for a subscription if you like. And the third one is Yahoo Finance, and that is just to track your portfolio. Get all of our picks we're going to put in here, and you can real time see how these portfolios do. You're going to paper trade for a little while. That means you're not using your actual money. You're going to, I suggest, like I said, paper trade and then see what the results are. Get confident with those results, and then you can choose what to do after that. So let's start with today with FinViz. So FinViz, lots of great information in here. Home screen just shows what's going in the market that day. The news section is second to none, up to date all the time with all the current news on there, faster than Yahoo, faster than the Trading View, faster than all that stuff. So I love the news section on there. I play around with the other one, the groups, all that kind of stuff. But the only other one I really use a lot of is the screener. And the screener here is what we want to take advantage of. So this is just a general screen right here. We're going to go up today. We're using the Bungee cord strategy, and I'll show you why it's called Bungee cord in a second. So I've got this set up in advance. You can go and set it up yourself. There's only three screening criteria that we put in this one. We keep everything super simple. I had a couple on here that had 15 criteria. Everybody tries to complicate everything so much. It's just not necessary, and I'll show you why. Under the descriptive, the only one we're going to choose is a market cap of small over 300. Under the fundamentals, we're going to choose profitability is greater than zero. Our forward profitability expectations are greater than zero. And really the only reason I choose that is if I didn't, I'm just going to put any in there. And I come down here, I've got pages, and I've got 3 full pages of stocks to go through. And I can certainly do that. There's nothing wrong with that. And I might do that if I find that my regular screener is not bringing up enough stocks. If I want some other options, I might change that and look to bring in some other stocks in there. So I don't need to do that right now, because with my current screening criteria, I have 15 stocks that it's suggesting to me. And as you'll see in a minute, I very rarely have more than 6, 7, 8 stocks into this portfolio. So 15 is more than enough to get going. And on the technical side, we're going to choose, this is the big one, the 200-day simple moving average, priced 40% below the 200-day simple moving average. And you can do a little research on what, if you don't know what this a simple moving average is. It's a very simple indicator that shows that this stock has fallen below, or has dropped significantly, quite quickly, below its average price, this 200-day average price. And that's what we're looking for. In the Bungee cord strategy, we're looking for stocks that have had a downturn for one reason or another, and we're looking to pick it up before it bounces back. And just like a bungee cord does, if one of these guys that jump off bridges into rivers, so you get down to the bottom and it snaps back. It doesn't come all the way, but it snaps back. And that's what we're looking for, to grab that price as it's snapping back. So you're going to see that in a minute. So here's the stocks we're playing with. I enter the criteria, I pull up a screener, and these would be the stocks I'm then going to look at to be part of this strategy. Now, I've already looked at a bunch of these. I've actually last week started a new portfolio, a bungee cord a portfolio, just so you guys can follow along. And I'm only going to give one example here, but I went through all of these, and it's probably changed a little bit since last week to determine whether I could or couldn't put it into the portfolio. And we're going to pick one out here. I'm going to show you why or why not it would qualify for the portfolio. So let's just look at, actually, I don't think I have that one, and this might be a new one. OMI, Owens and Minor. In this strategy, we don't really care what the company is. We don't care what it does. We're not looking at its financials. All we're doing is technical trading here, which means we're looking for that snapback, that bungee pullback. And so Owens and Minor happens to be a healthcare stock in medical distribution. Okay, whatever. OMI. So OMI, we're going to take over to our trading view now, and I've already pulled it up here. Let me clear the chart, and I'll show you what we did. So we're going to go to the 7-day trading. Excuse me, the 1-day view on Trading View. And if you remember from the last video, we had all those indicators put in. Those indicators will pull up these little green and yellows, blue. All these little signals you see are caused by these indicators that I've put in. And I think I did explain when you put yours in, you might see them a little bit differently, because what I've done is I've taken these indicators and I've modified them to work for me. I haven't changed the name of them in here, so you can still go in and find the Kinski buy-sell signal or the buy-sell by stockfins.com. You can go in and still find those. And they'll give you a very similar view of this, and not significant enough to worry about it, to be honest. Like I said, I've changed things around this to suit me, because I take a little bit more risk than most people, because I've done this for so long. And I certainly don't mind putting that risk in, because I'm extremely confident in the returns. And you guys will get a feel for that as you move along. So we're on the 1-day view up top here of OMI, and these are the views we get. We talked about that 200-day moving average. That blue line there is our 200-day moving average. I believe it's the light blue one. So you can see we've significantly dropped down below that. So what we're looking for here is, move that up a little bit. We're looking for these drops. And over the last little while, you can see there's been some significant drops that we could possibly take advantage of. And this is a chart that we love. So we see it coming down here, coming down, coming down, coming down, and it looks like it's bumping back up. So maybe right in there, we would start taking a look at it. Same thing here, we'd start taking a look at it. Another little drop, we'd take a look at it. That's not big enough for me. And here's a big one here, and we would take a look at it around here. So there's 3 areas that we if it was up on our radar, that we would want to start taking a look at it. And all we're doing there, this is just ballparking where the bottoms of these trends are. We're not in a rush. We're not crazy. We could say here's a bottom here, but it's not showing any revert. It's not showing anything. It's just showing one big drop and then a continued drop. We want to see it where it's sort of got to the bottom and it's going sideways for a little bit. Got to the bottom and going sideways for a little bit. That's a pretty significant jump there. We might have missed that one. And you can see what we have here. Got to the bottom, going sideways a little bit. Okay, now we're interested in these positions. So that's where we're going to start using our indicators. And you can see here that I want to qualify this. These indicators only go back so far. This is going back to February. So some of these little green ones only go back so far, because I don't need to see. Again, I'm dealing with right here. I don't know. I don't care what's happened in the past. A lot of stock traders will show you what's happened in the past, and anybody can do that. Anybody can go a month back and look at a stock that jumped and say, yeah, it's winner. I like that one. And so that's why, here you're looking over my shoulder on what I'm doing today. I'm not going to tell you what I've done in the past, and you shouldn't care about that. Care what I show you today and what my results are moving forward. So I've cut off. I don't need to see all those things back there. I cut those off. So we're just dealing up here, but you can see if we had gotten some of these green buy signals in these areas, we certainly might have been making buys. And you can see here, if one had shown up at 660, we could have gotten up to 1073. Here's another one. If we could have got in around 635, we would have gone out at 939. This was a small drop, so we had a small pullback, just like a bungee cord. A huge drop, you're going to get a big snapback. A small drop, you're going to get a small snapback. So here we would have been buying in at 654 and probably getting out around 822. Certainly not bad. Going back to February, I'm guessing that's a 30% return, 25% return, and just over a 10% return. So we would have done 60 to 70% return on Omni going back to February. Again, revisionist history, we don't care. We didn't. Would have been nice, but we weren't around to do it, so we didn't do it. So what we have here is, look at this last circle. So this last circle is what we're looking for. This last circle shows us that we indicated on the 1 day, this is an area that we're interested in. We go to the 4 hour, we see that green buy signal. So that's where we're buying right there. That green buy signal is inside of our yellow, which is what we want. If it's outside, we have to take a much harder look at it. This is inside, so this is an automatic buy. We like it. It's perfect. We buy it. Now, Omni's come up on our screening system because it is still below 40%. That doesn't mean that we can buy it. So over here, right here, it's below 40%. But this is the area we're looking for. We're looking for right after the drop. We're not looking for after it's pulled back a little bit, because there's the bungee drop. There's it snapping back, and after it snaps back, it just kind of does one of these, and that's what a bungee cord does. If I say that when you see these guys dropping off of a bridge, it snaps back hard, it goes back down, and slowly until it stops, and then they let the guy off the bungee. So this is the movement we're looking for right there, and that's what we're going to look for in all of our trades, is that movement right there, hard down, back up. So we did miss this one, but you can see what would have happened. We would have gone in at 462 and gotten out somewhere around 564, 20% gain. Now, let's talk about gains and limits. In this strategy here, I'm looking to do 10 to 15%, more often than not between 10 and 12%. I am not looking to make killer moves in this strategy on its own. There is some, when I explain the other two strategies, you will get an idea of how we can combine some to even get bigger gains. But there's always stocks out there. If I can take a 10% quick gain on every trade I make, a 1 week trade, I am more than happy. You can't complain about making 10% every couple of weeks. And so 10% is roughly the number I'm looking at. So if I got it at 468, 470, what's 10% on that? 47 cents. So 512, maybe 512, 515. So my take on this one would have been around 515 or so. Let's just, there's 519. That's the area that that yellow line there is where I'd be aiming at. And I probably would have cashed out on this one right here. Okay, so you can see that is a 4, 8, 16-hour take. So it took 16 hours because we're on the 4-hour chart now. That is a day and a half to make 10% on your money. Can't beat that. Take that all day long. So that was OMI. The other thing we're going to put in there is our stop loss or our exit, because we always want to have an exit area. I always say it's really easy to buy a stock. It's really hard to sell the stock. You don't want to admit you're wrong, that your buddies told you about this stock or this or that, whatever. Just get out, move on, take your money, put it into the next one, and you'll be fine. So we always want to set a stop loss. And this is where it's a little bit of your experience will help you with this. In this case here, I am more than happy taking a 10% stop loss. So in 463, roughly 46 cents, say 43 cents in this case, just for simplicity, 420. So that's where my stop loss would have been. Now, a lot of people are going to say, well, that's a 1-to-1 ratio. You're looking at possibly losing 10% to possibly making 10%. You're never going to get ahead with that. Your stop loss is too big. And what I'll say is, having done this strategy for so long and seeing the results, I am so confident I can get that 10%. I'm okay with the odd 10% loss because I think I'm going to get 80% wins. Um, when you start off, you want to make that smaller until you get a comfort level. What I found was when I and there's some we'll have some examples here. When I set a smaller stop loss, so let's say a 5% downside for a 10% upside, what I found is that a lot of times it hits this bottom and it just kind of leaks down a little bit and then it pops up and I get stopped out. Or I get a big candle down and it stops me out, and then by the time that candle closes, it's higher. So I just found for myself, I was getting stopped out a lot on stocks that ended up being really good winners. Um, and again, I've built that confidence up now to know that I'm more than happy to take the risk on doing that. And that's something on a personal level you have to figure out. I would suggest off the bat setting a 5 to 7% stop loss, just getting a feel for what's going on. And then when you paper trade, you also track these stocks, and then you go back and say, "Oh, geez, if I had kept that one, I would have had a 10% take. Hey, if I had and then after a while, you say, "Oh, geez, 7 or 8 stocks there that if I had held on to, I would have had a take." And there's only one or two that continued going down. So, um, seven, I would have had 7 more wins against 1 or 2 more losses. Track that yourself and figure that out and see where your comfort level is. But that's how the Bungee strategy works in a nutshell. The reason I use the day and the 4 hour is I've just developed, and for my personal use, and again, no rhyme or reason behind this, that stocks that trade up to $100, excuse me, I trade on the day and the 4 hour. Stocks that are bigger than $100, I trade on the 3 day and the day. So I would apply this strategy exactly the same, absolutely exactly the same. I'm going to go to a bigger stock here, Alibaba, on the 3 day and the day. I would look for big drops. Let's just see if we can find one here on Alibaba. Okay, here we go. So look at this. Here's a perfect example of a big drop on the 3 days. So let me just get everything off there. We're on the 3 day now. We see a big drop down. Now we're interested in it because we see that big drop. Here's another big drop down. Around here, we would have gotten interested in it. So let's just take the last drop. So now we get awful interested in this stock right around here. We pop down to the day, and look at this. We do have a buy signal on the day. Once again, we're using the 3 day and the 1 day here. This is actually just a great example. And so inside that circle, perfect. We get a buy signal on the 1 day. So right here at the close of this candle, they're saying, yep, we're pretty sure this one's going to shoot back. It just dropped. We're pretty sure it's going to shoot back. We would take a look at it. So it closed that day right here, roughly up 102. Let's call it 100. So now we're looking for it to hit 110 for our take. A little over 110 for our take, say right there. So we would have bought it. We would have sold it. And that was April 9th to April 22. 2 weeks, 10%. Thank you very much. Walk away. Get into the next one. That's 5% a week. So that's 20% a month. That's 200% a year if you trade that way. And again, I will show you another strategy where you can complement this one, or we can actually ride this one up a little bit higher. And using this other strategy, we probably would have 112 up to 130. We probably would have rode it to around the 120 mark and then cashed out there. Um, but that's for later on. That's after I explain all three strategies and you guys get comfortable using them individually. So, anyways, that is a 3-day and day chart that we're using. 3-day to identify the bottom, 1 day to identify the buy point, and we're doing that because we have a stock that trades over $100. If it trades under $100, we're going to use the day and the 4 hour. I think that last stock was $5. I don't deal with penny stocks, and when $5 is a little on the low side for me. I only usually deal with stocks over $10. Anything under $10, I consider a penny stock, but it does work still. Sometimes if I got stocks in the dollar range, I'll use the 4 hour and the 2 hour, or the 4 hour and the 1 hour, exactly the same way to get those kind of results. I might actually have one that I was following here the other day. Yeah, it doesn't really. Chart doesn't really show anything where a buy opportunity might have been, but there's a big jump in this one. But you can see that right now this is a dollar stock, what I consider a penny stock. We're on the 4 hour. You might say, well, there's a bit of a drop. Where's the bottom? It's really hard to identify the bottom on this one, so I'd probably just stay away from it. I want to clearly be able to identify the bottom. I'm not gonna find a stock and try to talk myself into buying it. I've got to see the pattern there and do it. Again, you can get emotional with this stuff. You don't talk yourself into buying it. It's going maybe with the position that it's got to meet your criteria. There's thousands and thousands of stocks out there. Why spend all day trying to identify this one as a buy? There's another 100 out there I can look in the next 10 minutes and probably find a perfect setup. So don't worry about it. If it's not there, don't push it, don't force it. So anyways, that's the bungee cord strategy. And then what you're going to do is once you identify your buy, you're going to put it into your, let's just go back to that portfolio over here. So this is over on, again, this is on TradingView. And what I do is I take there's my bungee cord strategy. And these are some of my closed positions otherwise. So that's my current bungee cord strategy positions. And let's just go to one and take a look and see what's going on with it. So DSP, let's see what DSP is. Okay, so DSP, once again, we're going to go through this real quick because we've already done it in the detail. Here we go, DSP on the 1 day. It came up on FinViz. I don't know if it's still there. No, it's not even on there anymore. So that's fine. So DSP came up on here using those screens. I said, okay, it might be of interest. Let's open it up. And what I see is a perfect example of not trying to find a reason to buy it like we have with that Omni. This is a chart that we just love. We just look at it and go, like, look at that drop there. We love that drop. We love this drop. That's history because you can see if we had gotten in around here at $11, we up to $16 within 3 weeks. So we would have been great there. But they gave us another opportunity. There was a big drop. There's a big drop. There's a very small drop. We might have considered looking. Let's just draw a circle just for fun here. So there's something that came down. It's going sideways a little bit. This initial drop wasn't big enough for us. We're not interested. So let's just see what happened. And then obviously, I'm going to take this one out here. So this other circle here is another drop that we've looked at and said, hey, you know what? There's a little bit of a bottom there. It's kind of gone sideways. Okay, now we're interested down there too. That's on our days. Let's pop over to our 4 hour. And boom, okay, so this is great. No green buy signal, green buy signal. Don't worry about why it didn't come up there. It takes into account hundreds of factors to figure out if that stock's going to be moving upwards. We don't care what those are. It has to do with volume and size of the purchases and short positions versus long positions and blah, blah, blah. Who cares? No buy signal. We didn't buy there. Out. No buy. Now, $12, we would have done fine. We would have got our 10% around there, but we didn't because we want the odds to be in our favor. Down here, buy signal. We got a buy signal right there, just inside our chart, which is fine. And then we put our buy in. We set our downside, and you can see this stock moved down and got very close to our downside. This is the example where I said, if I had set, let me just make that bigger for you guys. If I had set, so there's what I thought the bottom was. It actually bottomed out just a little bit lower. If I had set that too close, so if I said to myself, okay, that's my buy right there, so let's just move down a little bit, and that'll be my sell. See what happens? Like, I would have been stopped out right around here. I would have lost my trade right around here, and it continued down a little bit further, and now it's shooting up. So that's what I used to do, and but again, that's fine because you got in at 968, you got stopped out at 938, you lost 30 cents on this trade. What's that? 3%. Any stock trader tell you if you're only losing 3% on a trade, like you're more than killing it. So it sucks to lose, but lose 3%. I see guys that jump on the train. Let's just say they buy up. Oh, that's a bottom there, and they buy $11.97, and then they watch it go down, down, down. It's $9, $8, $7, $6 now. They never get off that train moving backwards. It's ridiculous. So take your 3% loss, go find another stock, buy that one. You'll make your 3% back on the next one. Or like what I do now, once you get a comfort level of this system actually working, set a 10% loss. So on 976, I'm happy losing $9.07, almost 10, 97 cents on this one, which would roughly put me down to $8.70, $8.80. So I'm happy with my stop loss being down there. And in this case here, it seems to be paying off because I got in at 970 and the stock closed at 1031. And my upside target is at 1079, and it seems to be heading there fairly quickly. And so I love this one. This is what I'm looking for. This is exactly what we're looking for in the bungee cord strategy each and every day. Okay, so DSP I identified as a buy, and I actually did buy it last week. Let me just take a look at this one. This is an example of me not following my own rules and taking a bit of a flyer on something. I shouldn't even say flyer, but it's just I read about the company a little bit, and you shouldn't do this, but I read about the company a little bit. I said, what the heck? It looks like it's kind of interesting. This didn't come onto my radar until around here. It didn't show up in my screening reports until around here. So that's why I'm drawing the circle there. I could very easily, again, be a revisionist like a lot of these stock traders do and go back and say, oh, that's where I identified the bottom. Well, who knows whether you did or not. Let's live in today's, let's not live in the past. Let's live today. That's where it's at. There's my circle. I'm going down to the 4-hour. No buy signal. No buy signal. We didn't buy. I happen to look at it and say, you know what? I saw a buy signal back there. It was slightly out of the range, but I want to get something in my portfolio, so I'm going to buy this one anyways. So I ended up buying it at 64.20, and it wasn't a good setup for me, and I did it anyways. And you can see what's happened here, all the way down to $60. In this case here, I did set a very I set a very again, didn't follow my own rules. Usually a 10% out. On this one here, I think I used a little bit more. I almost got stopped out right here, but I just held, and it's starting to bounce back a little bit. So 64 down to roughly 60. I guess 640. I guess 58. Yeah, 58. That's a 10%. That's roughly a 10% stop loss there. But you can see what happened here. Ideally, I would have got this action here, that bungee cord bounce, But this one here, we didn't. It came down, and we'll see now. We'll see now what's going to happen. But this is the area I expected to bounce now. So unfortunately, I bought way too early on this one. I bought over here. My expectations now is that we will get a buy signal. That we're going to get a buy signal ideally in here. We're going to see one of these green buy signal charts pop up in a second, sometime in the next day or so, or hopefully on Monday. And then I'm going to be able to buy it like there. And it's a $62 buy versus a $64 buy. And then my expectations were we're going to see that buy signal, and then we're going to get that pump. And then we're going to get that take at 61 to 67. So 67 would have been the area for the take. So that's our target. That top green line is what our target is. I'm actually going to leave that one in there, and I'm going to leave it up. So we'll go back and see if I was right on this one at some point. So once we've identified all our trades, we're going to go We're going to go over to Yahoo Finance, and we're going to input those into our portfolio. And you can see these are really easy. You just create a new portfolio. It walks you through it. It's super simple, and it gives you all the feedback you need on your returns. So in this case here, I had set up for $100,000 paper trading portfolio. And I set it up at $100,000 or $10,000 or $1,000. I just find it easier to track my returns. If I have a $100,000 portfolio and I see it's at 106,294, I know I'm up almost 6.29% on this portfolio. It just makes it really easy to see what your returns are. And then we're talking about FRPT and DSP. You can see there's my DSP, and so DSP is up 7.8% for my total gain. Very nice. I didn't buy the Fresh Pet. I thought I bought Fresh Pet. I think I bought Fresh Pet in another portfolio. Either way, all these were put into place. You can see here my trade at 814, 819, 815, 813, 805. So these were all put in place a week to 2 weeks ago at the most. They all will be meeting our criteria for purchases. So you can see big circle, little circle, big circle, little circle inside. Big circle, little circle looks like it's just outside. So I broke my own rule on that. Broke my own rule on that one, but very, very close. And those are the purchases I made, and we'll see what the results are. But you can see right now in 23rd. So in a week and a half, I am up 6.29% on this portfolio. There's not a person in the world that wouldn't take that. But look at my downside: 1%, 4%, 1%. KLC, let's go see why that's down 4%. Let's go see why. So let's start with always start with the 1 day. We like the 1 day to start off with. Did we buy this one the proper way? So there's that drop we're looking for. It was up here. Boom, drop down. We love it. That's when we start getting interested. We go to the 4 day, the 4 hour. And you know what? Look at that. The 4 hour was just above. It's pretty close. It's right in there. Nothing wrong with that. And so this is actually a good buy. Sometimes I make bad buys. I'm not gonna say I don't. We set our stop loss at a reasonable amount. So the buy was at 758. 10% stop loss for me is 6. So it's 680, 690, 752. Yeah, my stop loss should have probably been around there, and I might have got stopped out. I did set my stop loss a little bit lower on this one, so 656, 720. Yeah, I don't know why. I don't know why I did that. Again, just because I'm confident. When I say stop loss, I draw these lines for myself. I don't actually use stop losses on my accounts. And the reason I don't use stop losses on my accounts is that you'll get times, I'm trying to just find a big candle, you'll get times where what happens is this is a. Let me see if I can just find a bigger candle and show you guys. I can't on this one. You'll find that what okay. So what happens is on a stop loss, if I make my let's just say I'm playing this stock here, and I've set a stop loss here. I bought it up here. I set a stop loss. What happens is the stop loss gets activated immediately when it hits that price. So as the price is coming down, this stop loss is 126.51. You can see this little candle at the bottom shows you where the price has been throughout that day. And it got down to 121. So I would have been stopped out at 126 right there. That's my stop loss. These candles bounce around and they get manipulated by stock buyers, day traders all the time. It's where the candle closes that's important, not where the candle's been throughout that day period. It's where the candle closes that's important. So this one came down and was probably red. It bounced back. It closed green and it closed up at 130. So I would have preferred to stay in this trade, but I got punched out here. And so that's why I don't use those lines. I draw the lines, but I don't use the actual stop losses on my account because I'm interested in where that price closes on that candle. And once that price closes on that candle, then we move over to the next candle. So let's say this is a Monday, then this is a Tuesday and a Wednesday and a Thursday and a Friday. And you can see on this candle here, say this was the Monday, that this stock opened up way up here at 147, came all the way down to 128, and then closed at 131. So tremendous price movement throughout the day. But it's where that closes that I'm interested in. And that's why I don't use actual stop losses on my accounts, because I watch it daily. Okay, guys, let's see, 36 minutes. I think that's enough for today. That is our bungee cord strategy. And what we're going to do here is I'm setting up my TikTok right now. Obviously, you can tell on my YouTube, this is a really new account. I know it's going to take a long time to build up followers and people. And I'm following a good friend of mine that's done this in the past. He started off with YouTube, and I think had 3 or 4 followers for months. And then TikTok, he started up a little TikTok thing and immediately started getting followers, thousands and thousands of followers just on quick little stock tips of the day kind of thing, and then redirecting them over to the YouTube, and then what the YouTube gives them the real detailed information and the details they need to be successful. So I'm going to set that up as well. I'm not a TikTok kind of guy, but I'm going to set up a very simple, daily TikTok thing, and basically what I'm going to do is when I do a buy or do a sell on my strategies, I will post them. I will post them timely and up to date. So, if today we had found one, I would go on TikTok and post DSP, buy today, boom, boom. This is what we did. Go to YouTube to check it out. And then when I sell DSP, it's going to go on there as well. Sold DSP today, made my 10%. Thank you very much. Just really quick clips on there to try to generate some interest in what we're doing. And that should be fun. Knowing my technical skills on getting that running, and that'll be interesting. And I hope this has provided you guys a bit of information, and I really hope you try this strategy out. Paper trading, and again, please, if you're going to do it, paper trade, and get a really good feeling for how things work. So we will see you again, guys, and thanks for tuning in.